Hi everyone, Darwin here, and I'm excited today. I'm going to show you something really cool. If you are a buyer or an investor, you're really going to love this tool. So it's something that I've been doing with buyers and investors over the last little while on Zoom, actually, and people just seem to love it. And so I'm going to show you today. And so if you're interested, you can reach out and we can set something up. This is very quick and easy to do, and it's going to give you a lot of very pertinent information. So this is a spreadsheet that I use that really breaks down a lot of the information with purchasing a property, whether it's just for yourself as an individual or if it's an investment that you're looking at and you want to compare properties. So here, this one I've got for illustrative purposes. We're looking at Brampton, Mississauga, Toronto. So we can look at the description of the properties, the purchase price, the down payment. Obviously, if we're putting down less than 10% as an individual, then the CMHC calculations automatically will come up with whatever that premium is, and then the additional amount on that mortgage. The next thing we would be looking at are the closing costs. Land transfer tax applies. If the property is in Toronto, like the one is actually there, then we would add the Toronto land transfer tax. And so we can do that very quickly, very easily, and apply that if that's the case. So then we're looking at lawyers' fees, home inspection, appraisal, and all of that is tabulated. And then we're looking at the total cash required to purchase each property. The other thing we would also consider are there any rebates? Are you a first time buyer? So if you are, we would just simply add that, and then whatever rebate would come up, um, depending on your situation, whether if it applies just to an individual or is it the couple. The mortgage calculator, obviously, we will punch in the information, the terms. We're going to use five since this is looking at a comparison of investment properties, the rate, amortization, same thing, 30 years, and then the mortgage per month. Then down here, we see the principal paid down at the end of the term, and then the remaining balance at the end of that term as well. So this would be the initial sheet. The next thing that we would look at is a projection sheet. So the projection sheet now takes that same information that we just looked at. It's automatically populated over here. And so we see a lot of that same information: purchase price, down payment, closing costs, and total initially required to purchase each property. And so we can do a comparison of these properties if you were an investor, or even if it was your own individual property, you kind of want to see projecting long term what that might look for. You may plan to own something for short term, move in and as a principal residence, and then sell it. Let's see what that may look like over a 5-year term. The basic mortgage information, but then we get into this stuff here, renovation, and we start to input. If we're comparing properties, some of them may need a little more work, so we can input and select the different types of renovation. So that becomes a part of that initial investment here. The ongoing expenses on the property, property taxes, home insurance, property repairs, advertising costs, condo fees if they apply, or pothole fees if they apply, management company costs if they apply, utilities if they apply. So whatever applies, we would simply input that in here and then get the total monthly expenses on the property. And of course, we see that annualized there as well. The next thing we would do, looking down here, is the rental income on the property. So here we've got the first property was a 3-bedroom upper with a basement apartment. What can we expect in rent there? This one is an entire house rental. This one is being rented individual rooms. And so whatever the scenario is that we're trying to compare, this might be a student rental in Toronto near York University versus something in Brampton. So, we could totally do that and compare and see what makes sense. Then, of course, all of that is tabulated. We look at cash flow numbers. There's also a vacancy factor, a 10% vacancy factor that I utilize here because, there may be periods where you do have the property or a segment of the property sitting vacant. And so we just use a 10% vacancy rate for that to account for that. Then we have a forced appreciation segment that we use and we talk about if you did renovations, what kind of improvement and value add to the property. We would use a guesstimation for that because that's also a return on your investment. And then the last return we would be looking at is the annual appreciation here for illustrative purposes. We have 4%. We would use whatever factor we think or we deem appropriate, projected over 5 years, and then we see the return right there. And then lastly, of course, all of that information is broken down, tabulated for us, initial investment over 5 years. What does that look like as a percentage? And then finally, when we sell the property, what we can expect cash in hand the down payment plus the mortgage pay down plus the appreciation. This is what we would expect. And there you go. Very helpful tool. Whenever you're ready, I'd love to sit down with you, look at your situation, whether you're an individual just buying a property for yourself, or you are an investor, you want to look at multiple properties. I'd love to sit down. Let's set up a time. We can do this on Zoom, very quick to do. I've been doing this in real time with some people. They love it, and they see how the whole process works. So please reach out. I'd love to do a great job, and let's find you the right place.